Hello guys, welcome to the Trading Parrot. Funding fees, liquidation events, all of these things are extremely important if you are trading crypto. Let me tell you why. First of all, the funding fees can go positive or negative. That depends on the ratio of positions being long and short in the market. The good news is that there is a lot of data in TradingView that you can use to produce indicators like this. And all these indicators are free for any single user. So if you want to understand why we are seeing these massive candles to the downside, what is triggering this thing, why there is a snowball effect here, you need to have exposure to data in regards to funding fees and on-chain data as well. So let's start with a very simple example. Here we have at the bottom an indicator that I love, which is the ratio between longs and shorts. This indicator goes from 0% to 100%. And what does it mean when it's, for example, like now, which is 30-something%? It means that 30-something% of the positions in Bitmex are longs, and they are doing longs with futures. You can see the source code here is extremely simple. It's just pulling the data from Bitmex, which they make public via TradingView. And then it's a simple division between the longs and the shorts, which is giving you the ratio. It's as simple as that. And by having this in the chart, you can at all times understand what's the proportion of longs versus shorts. And you're gonna ask me, why do I care about that? You care a lot about that. Look at this. Every time there is a massive dump to the downside is usually caused by liquidation events. This is a liquidation event, and this is a liquidation event here. And then here you get another liquidation event, and guess what? We get another one that started the bear trend. And when do these things happen? They usually happen when there is too many longs, when you hear people saying there's too much exposure to futures. These percentages, they start spiking like this, and then the risk of a massive collapse in price increases. So even if you were using just this indicator with a single alert that you can add here by clicking on this plus, you could send yourself an alert when the ratio of longs crosses 25%, when it crosses 40%, and when it crosses 50%. And these different levels of exposure of longs, when you are topping the market, they grow exponentially in terms of risk of you feeling all the red bags and getting caught at the top. So visibility from yourself on when these things are happening are a must. Let's move on to the next indicator. This is called Bitmex funding. This indicator is again open source, and it plots in the chart in a very clear way whether there are more longs or shorts. This is another clear indication that there could be a massive trend reversal. Usually you see a bull market completing the bull trend and calling for a top when you see first a liquidation of longs, so they lose the juice to keep pushing the price higher with futures because they lost that cash. Then you see that the funding rate goes negative, and those are paid to the people that are doing shorts. And then you see more events like that until the price fully bottoms. And then you see that the shorts are doing something like this. The trend starts going down and until it gets to a minimum, and then you see trend reversal again. That's what we are seeing again here, right? Those are trends of the funding fees. These tops here are the amount of longs that are skyrocketing. So this is a lot of leverage. But as you can see, first there is a lot, then less players, and then less players, and then those last ones remaining still in the market, pour them, because those are the ones that get finally fully liquidated here in this event here. The next indicator also applied to to Bitmex and is still related to funding and premium, but it's a different implementation. So you are going to see slight differences here. You can use both of them. You can set up alerts on different levels of this and different levels of that. You're going to find on Twitter some people saying, I cannot wait until the funding rates go back into 0.2, into 0.3. Why do they say that? Because those levels are historically related to tops. And the same for this, these are related to bottoms. So on setting those alerts on those things and keeping an eye on this sort of charts, keep you informed of what could be a potential bottom. Let's move on to the next indicator. And this is the one that probably is catching more your eye. It's very interesting, this one. It's on the daily time frame and it's showing me liquidation bands. And for that to be more clear, I'm going to have to zoom in here. So when the price is moving, this indicator is telling me at what price people are going to start getting liquidated. You're probably guessing it right. If you're going with the price to the upside and you get to the first band, the first number of players are risking liquidation. And if you want to know who, you open up the settings here. So the first ones to risk getting liquidated are the guys that are playing with 100x. And those are the ones that are shown here in the thicker red and green line in the chart. So if the price crosses this, many of them will lose their position. They wouldn't have enough collateral to survive 100x that keeps going higher. So what this chart is telling me is that the first players, the ones that were doing 100x and the ones that were doing 50x, and they were short in the market, they wanted the price to go lower. At these levels, they are getting liquidated. And then the third level, which the third level is 25x, they also got liquidated. The first three lines of shorts got liquidated that day. And this here helped the price to wick to the upside. But at these levels, people were selling and taking profits. And that as well took the price below this band again. When we came back up to this level here, the liquidation band went higher. So in order for the 100x to get liquidated, the price needed to go above that. And at these prices, they were shorting the price. They started shorting, people started taking profits here, and the price came back down here. At these levels, you start seeing that the price is crossing the green lines, which means that the longs are getting liquidated here. They wanted to buy a potential bottom at 41K, but the price kept going lower to 40K. So that means that the 100X, 50X, and 25X dudes, they all potentially lost their position in this exercise here. Those longs liquidated pushed the price even lower here. If shorts get liquidated, the price can go higher. If longs get liquidated, the price can go lower. So here we are looking at April and May 2021. Very interesting price action here. This is the time where the price started getting extremely exhausted. It wasn't able to put another all-time high here. And we can see that the shorts here, they will risk liquidation if the price keeps going higher here. Luckily for them, they are winning the battle here and they are starting to short and they push the price down to here. The longs are thinking that they can potentially cause a new swing high here, but they fail and they all get liquidated. 100x, 50x, 25x, 10x, all of them liquidated, all of them up until the very bottom. The only ones that they, in theory, survive here are the 1x, which is the last one here. But even 2x, in theory, here gets also liquidated. And that's a massive, massive, massive liquidation event. This dump is almost 50% from the top. Not to mention that some people might have been in red from the very top. So if you call it from the very top, this is 53%. So just enough to liquidate lots of long positions in the market. And that's what people call a wipe of leverage in the market, at least from longs. But this can happen exactly the same to the upside. So in July, when things were about to reverse to the upside, you see first here people buying the bottom, starting long positions, And then what happens here? We are crossing the lines where the shorts are getting liquidated. And when they get liquidated, you see these wicks. These wicks are telling me in candle language that the shorts, they lost here. 4 levels of shorts, the different levels of leverage got liquidated almost up until the top. Not all of them, but most of them. And this is when people claim victory and they say, okay, shorts are gone now. And when the shorts get that level of pain, many of them, if they still have juice to play in the market, they switch to bullish players. And when they switch to bullish players, that gives more energy for the price to keep going higher. That's why you have this sort of seasons of longs and seasons of shorts. They try to hide in the group. All the shorts playing at once, all the longs playing at once. The last indicator I'm going to show you is the Bitmex LLVWMA. This is a weighted moving average on the liquidations. It makes it a little bit more complicated to see the chart. These levels are liquidation levels, very similar to the previous indicator. They are just shown in a different format as if they were just a moving average with a weight. And what you see in these vertical lines with different colors is telling you who got liquidated. If you see a green, that means that the longs got liquidated. And if you see red and it's starting to switch from more greenish to more red, that means that the shorts are getting liquidated. So when you want to know what happened to the market, you can just pull in this indicator and it's going to tell you who lost that day. It should be pretty obvious when you see just the candles. But in this case, this indicator shows you how many of them, what was the proportion that got lost there in terms of ratio between longs and shorts. But in summary, all of these indicators are complementing how much I know about what's going on in terms of funding fees, which is very important for any trader, even if you're running bots, to have some exposure to levels that are key. In summary, how do I use all these things? The top 2 indicators, I use them to understand what are the key levels and what sort of leverage is being put on risk. So when I see a movement on the price, or I'm thinking that the price could get from here to here, I can assess how much is going to wick to the downside if I can see visually here where are the longs and the shorts. These 2 indicators that are kind of redundant, but they are different in the sense that they have different implementation, they are showing me where is the funding fee when there are spikes and when those levels are reaching historical levels of tops or bottoms. And the ratio of long and shorts is definitely a must. You cannot be trading long when everybody's trading long, and you shouldn't be trading shorts when everybody's trading shorts. And a way to know that is just by monitoring this simple indicator here that gives you the ratio. And all you need is to set up an alert on all these levels to get informed. You don't have to be watching the chart all the time. That's why you get the alerts on TradingView. I set up alerts on all these levels for myself, and I also use the funding historical levels to trigger sells in the orchestrator. The original orchestrator is set up at the moment to exit the market when we reach levels that historically have shown to be the top of the market. Let me know in the comments, how do you use the funding fees, the rates, the ratios, and all this sort of information for your trading? Have you been ignoring this data all this time? Maybe it's now the time for you to start looking into detail into how to use these things. Please give us a like and subscribe to the channel. I'll see you on the next one. Take care. Bye-bye.